Hi, you're listening to Mind Your Business with Carla Dennis, and I am Carla Dennis. All the years that I've been in business, I have to tell you, I've seen so many business owners lose their business, make critical mistakes in their business because of lack of knowledge. I want to provide you with great tools and content so that you don't make these same critical mistakes in your business. Let's jump right into Karla's mailbag, something I really enjoy, answering the questions of people that are following me, my clients, and people that have questions on Facebook or Twitter. We had a question come in this week, and this question is, I am a single shareholder of an S corporation, and I physically worked in Arizona in 2013. This year, all of my revenue has been in California and none from Arizona where the corporation was formed. Do I need to dissolve the S Corp and form a new one in California? And I love this question because we have people that are creating corporations in multiple states. And to answer your question, yes, you do need to dissolve that Arizona corporation and become a corporation in California. A lot of people will go to various states and incorporate, and then they'll come foreign to California. Wherever you live is where you need to incorporate, and then you go foreign to other states. This is such a big issue among states, among taxing authorities, and where to apportion income. So I'm glad you asked that question because you definitely want to dissolve it as an Arizona corporation and create a California corporation. That was a very, very good question. Another question that has come in this week is a gentleman says, I am the owner of a carpet cleaning business with no employees and no partners. Can I depreciate my van and all of my equipment as a sole proprietorship? Absolutely. Any business, whether you're a sole proprietorship, a partnership, a corporation, a limited liability company, you still have the right to depreciate any equipment that you are using in business. And it's also one of those great tax write-offs that a lot of people don't realize that you can take advantage of. So if you have a van, if you have equipment, if you have materials in your home office, a desk, a chair, all of those things can be depreciated for tax purposes and give you a greater write-off. So that was such a great question. We have another question here. It says, if an employee's withholding taxes were incorrect for the previous year, should an employer refile the employee's withholding taxes and issue a corrected W-2? And the answer to that is absolutely they should. It is incumbent upon the employer to always make sure that an employee's withholding taxes are correct, because those employees' withholding taxes are what we call trust fund taxes. Those taxes, those dollars belong to the employee, and not to report them correctly can really lead you down the path of trouble with Internal Revenue Service, because when it comes to employee taxes, this is an area of the law that the IRS does not play with. So absolutely that employer needs to change that employee's W-2, correct it, give them a corrected copy, and make sure a corrected copy goes to the Social Security Administration. That's very important because W-2s and W-3s and all of that reporting of our wages every year, that's governed by the Social Security Administration. And then the Social Security Administration sends it to Internal Revenue Service. So we want to make sure it gets to the right place. Very good question as well. We also have a question that says, are child support payments deductible, or can I claim an exemption for my child? And I absolutely love this question because child support payments, unfortunately, they are not tax deductible. And it also goes back to, for example, if you are in the house with your child and you're buying your children clothing and food, none of that's deductible. So child support payments are not tax deductible. Now, whether or not you can claim the exemption of your child depends on what the court has to say. If there was like a legal separation, if you're the only parent, of course you can claim the exemption of your child. But now you're starting to get into what the legal documents say. So I'm always going to tell you, in a situation like that, you want to revert back to any legal documents that you have. If you are in possession of your child for more than 6 months out of the year, the tax law does say that you can carry carry that child. But a lot of times you'll get into these situations where the other person will carry the child first, and then you're battling to get the kid back on your tax return. So this goes into a little bit area of a little legal stuff that you definitely want to get squared away. That's really, really important because we don't want to lose the benefit of our children on the tax return. And that can happen if we don't get that dialed in properly with the correct legal papers. We also received another question. It says, I received Social Security benefits this year that were back benefits for prior years. Do I have to amend my return? That's a very good question. So the answer is, do you have to amend your tax return? Absolutely not. If your prior year Social Security benefits were paid to you in the current year, you're going to file that income in the current year, not in the prior years, because we are, for the most part, what we call cash basis taxpayers, and we only report income when we receive the income, even if it were attributable to prior year taxes. So no, you're not going to amend those returns. You're going to report that income currently, and depending on what other income you have on your tax return, that Social Security may not even be taxable. So that would be even a greater benefit to you. So you certainly want to vet that out, get the right answer to that. All right, we have another question that has come in, and it's, when I file my taxes at the end of the year, how do I report the estimated tax payments I made during the year? And I want to explain what estimated tax payments are before I even answer that question. Estimated tax payments are typically for self-employed individuals who do not have a pay stub where they're paying in withholdings, or they could have a pay stub, but the withholdings is not large enough to cover the overall tax liability of the year. And because we are on a pay-as-you-go system, IRS requires us to make estimated tax payments 4 times a year: April 15th, June 15th, September 15th, for individuals, January 15th of the subsequent year, or if you are a C corporation, you'll make your last payment on December 15th. You're going to report those estimated tax payments on the tax return on the line that says estimated taxes paid. So you're on the second page of your tax return. You have lines that say income tax withheld from wages. You have line that says estimated taxes paid for the year. You're going to report it there. And please, please make sure you report your estimates correctly. I see a lot of people who are reporting their prior year tax payment that was due on 4/15, the prior year's payment, on their estimated taxes for the next year, because that's a time period where you're making 2 payments on April 15th. So let me give you an example. On April 15th, you could be paying off your 2013 tax liability, but you're also making your first quarter payment for 2014. You have a tendency to lump those two numbers together and forget that one was for prior year. So we certainly want to make sure that we make that adjustment. I also had another question come in that says, what do I do if I receive a letter saying that I'm being audited by the Internal Revenue Service? Well, the first thing I'm going to tell you is don't panic if you receive that letter. My second advice is don't contact the Internal Revenue Service unless you are prepared to talk to them. And that can lead you down the wrong path. I would say that you definitely want to get with your tax professional, find out exactly what you're dealing with, and then choose which path you shall take. If you're being audited, I'm never going to recommend that you represent yourself. The IRS is trained. Notice I said they are trained to get information from taxpayers. What you think may be a friendly conversation is really a conversation where they are getting data and information from you that you're really not aware of. These were all great questions. I'm looking forward to you sending in more questions. If you have any questions and want to talk to myself or my guests, please reach us at 800-721-7374. That's 800-721-7374. Or reach us at nybuniversity.com. That's nybuniversity.com. Thank you so much for listening. I can't wait to have this conversation with you again next week. And remember, mind your business.